Hey everybody, my name is Kartik Subramaniam. I'm a real estate entrepreneur here in Southern California. I'm the founder of a very large real estate education company. I absolutely love what I do. I have a passion for the business. I'm happy to have found it. Follow my journey here on YouTube. Hey everybody, Kartik Subramaniam over at ADHI Schools. Wanted to share something a little different with you this video. And I wanted to share because a lot of investors are coming into the real estate market having bought single-family homes. Those homes have since gone up in value since 2008, 9, and 10 when they purchased the properties. And now a lot of people want to sell. A lot of my clients anyway are selling and they want to buy bigger property. Now, when you talk about, let's say, getting into commercial real estate, there's a few different, what I like to call pillars of commercial. You can invest in multifamily, which is apartment buildings. You can invest in retail, you can invest in office, you can invest in industrial property, you can invest in raw land. So there's a whole host of commercial assets that you could invest in. Now, each one of these investments has their own set of challenges and risks. If you're a single family investor, one risk that you have is if you have one house and one tenant, and that particular tenant ends up leaving, now you're stuck with zero cash flow for the month until you find a new tenant for the space. But even office and retail properties and industrial have their own set of risks. In fact, I have something here from CoStar with regard to some retail investments that are under a little bit of risk, and even some office investments that have faced some risk. I'll give you an example. CoStar is reporting that Conde Nast, which is the parent company of a lot of publications like GQ and a lot of other popular magazines, is now putting up 330,000 square feet of space in One World Trade Center up for lease. Now, Conde Nast was one of the first tenants to sign on to One World Trade Center when the property, prior to it even being built. Now, they're putting up 330,000 square feet of office space for sublease, presumably because they don't need the space anymore or they're relocating. This presents a risk for the investor of One World Trade Center because they potentially might have a tenant that won't be as strong as Conde Nast was. And that's a little bit of risk for that particular ownership group. Here, I have some retail news. The second largest Applebees franchisee is filing bankruptcy. This particular franchisee operates 159 Applebees locations throughout the United States. And Applebees is, they've had apparently, CoStar is reporting that this Applebees franchisee has had 4 different presidents since 2014. That's a sign of maybe some instability within the group. So if you own a lot of the real estate that this particular Applebees franchisee is operating out of, this presents some risk for you because if they're petitioning for bankruptcy protection, theoretically they could be vacating some of the spaces in theory. Now, of course, CoStar is reporting that this particular franchisee has no plans for potential store closings, but the point is that as a landlord, it doesn't make you feel very comfortable, of course, when your tenant is filing for bankruptcy protection. So regardless of what it is you're investing in or what it is you're doing, there's risk involved. There's risk in terms of, single family homes. If you have one of your tenants that ends up vacating the property, you have no cash flow. If you're owning apartments, 1 or 2 of your tenants vacates, you have less cash flow. If you own industrial real estate, if you have functional obsolescence because you had an industrial tenant that built out the space to manufacture widgets, and now those widgets are no longer needed by society, you could have a property that's tooled up to produce something that isn't really in demand anymore. So no matter what it is you do, there's a certain element of risk, but I want to let all my clients know and the real estate community know that, if you've made some money buying a home and it's gone up in value and you want to sell it and invest in something else, there's a whole set of other risks that are associated with whatever it is you're doing. Part of investing in anything, whether it's stocks, bonds, the real estate market, there's always going to be an element of risk. It's just, what are you comfortable taking on? Anyway, leave a comment below. Are you an investor that's made a little bit of money in residential single-family investments and you're looking to buy something a little bigger? Are you a broker that sells investment real estate? What are some things that you've noticed in your brokerage practice? Leave a comment below. Don't forget to subscribe to the channel. It'll help me make more videos for the real estate community. And of course, I'll put links to these CoStar articles in the description box. Check it out. Love to connect with you on Instagram. My information's on the screen. We'll catch you guys on the next video. Thanks.